Good afternoon, everyone, and welcome to Stock Market Today. It's Ali Coram and Carson here with a breakdown of the action in today's session and a look at how the week turned out. Today, we did see stocks closed modestly mixed, but well off of intraday lows on the heels of a too-hot job report, Ed.
Yeah, it was really impressive performance, resilient performance by the market. I want to take a look at three stocks that are trading around buy points: Dexcom, Cheniere Energy, and Invesco Solar ETF TAN.
All right, well, we'll take a look at those three stocks, but first let's analyze the major indexes. Today, the NASDAQ closing down 0.2%, the S&P 500 down 0.1%, and in the green, we had the Dow up 0.1%, and small caps, the Russell 2000 up about 0.5% today, and we're at key levels for all of the major indexes, and as you said, Ed, today's action does feel like we did have a showing of some resilience today.
Yeah, this week, I mean, this is definitely one of those weeks where we really shows the example of it's not the news, it's the reaction to the news. The market wasn't looking so great earlier in the week. The NASDAQ was coming down below the 21-day line, testing the 50, and we can look at some of the other indexes later. But then on Wednesday, Fed Chief Powell came out, and honestly, to my ears, it didn't sound that different from what he had said before. But suggested we're going to slow down on rate hikes, but that was already sort of understood, but also said that rate hikes weren't going to end anytime soon. But the market heard that news and took off and really rebounded here and got about up to the recent highs. And so that's nice to see. Still has some distance to the 200-day line, and that may be relevant down the road. But the S&P was the real winner here.
Exactly, because we saw the S&P getting above its 200-day line on Wednesday on the heels of that news, the first close above that level in quite a while. And we had some pretty strong resistance there when the S&P tried to get above that level in mid-August. And it does still seem like it's not clear or guaranteed now that we are going to stay above the 200-day. But again, that resilience, I think, in today's action with closing off lows and still holding that 200-day.
Yeah, getting above it was nice. Holding it again, the news seemed to be pretty negative, and given that people really took the most positive spin you could take off of Powell, and then to get that jobs report, you could have seen that. I mean, it would not have been shocking if we'd seen a 4% decline. I mean, obviously
futures were really ugly, and open wasn't great. So,
but yeah, I mean, I will also note that when the last time we got above the S&P, 200-day for at least a couple of weeks was back in March, and that's when what happened there is that the NASDAQ came up to the 200-day line, and it hit resistance. Yeah. So as the NASDAQ comes up, I mean, let's just say for the moment, as you say, the battle's not done, but if the S&P does start to make some distance and the NASDAQ moves up, that could be one last test, that you would see to see if this is more of a sustained rally, for all the major indexes here.
Yeah, to see what direction we may go. Yeah, we are far from out of the woods, but I think it is an encouraging step. If you do draw a trend line from the highs, I mean, we are right there, Ed. Poked above it on Thursday, came in today. So it seems like that, in addition to the 200-day line itself and the recent highs, that seems like a pretty clear area that we are watching. But if we do get above that level next week and have a solid week next week, how confident should we feel in rally? Would it mean that we are out of the woods and we should start adding exposure? Or is this just a different environment given the economic factors at play here?
Yeah, it's hard to know. Every rally is different. Every economy is different. I think you would give confidence that to get above that. I mean, but you never know, because next week there's not too many earnings. The economic news isn't that important. But then the following week we have the CPI followed by the Fed meeting. So the next day. So, I mean, there's never
more landmines.
It's not like it's a bull market. If we get above just this trend line, that means it's never gonna end. It's a bull market forever. But I think you could start feeling more confident that the rally might have some legs, and you might feel more comfortable adding exposure.
Okay. And let's also take a look at the Dow, which has been the leading index in this rally, seeing it hold above that 34,000 level and now above its highs from that mid-August area, Ed.
Yeah, looking good. And there's a lot of Dow stocks that have run up and now have been forming handles or other things. So it's actually sort of constructive what the Dow is doing. There's a lot of good-looking Dow stocks setting up.
Okay. And let's check in on the Russell 2000. I mentioned a key level here also being the 200-day line for the Russell and seeing a pretty notable upside reversal today for the small cap index.
Yeah, so that's really positive to see, seeing two broad indexes on the big caps, small caps. I think you like get over that 189.56 area. That would sort of be getting to a decisive area above its 200-day line. So,
Yeah.
but that's still continuing for sure.
Yes, it is. And the 10-year Treasury yield, a pretty big move lower in that this week. We'll take a look at the weekly chart here. So, your thoughts on continuing to see this erosion here in the 10-year yield?
Yeah, I'll be honest, that was pretty crazy to see. I mean, what does it take to get the yield to go up again? It was a strong jobs report, so either from the sign of growth or inflation, you would have thought that you'd get at least some kind of bounce today, and there was a bounce, but it lasted for a few hours. The fact that we closed lower really really shows you the market, the bond market as well. That's coming. That's a huge reason why the stock market rallied off of lows. So that has been a big tailwind. That's just really impressive and just something to watch here. But it's right now, investors are definitely in a glass half full kind of mentality. They see news that could go either way, and they're taking it in the positive light.
Okay. Well, let's also just quickly look at the dollar because similar action here to the 10-year yield that we've been tracking and how it has this inverse relationship to the equity market. And now in terms of sectors to watch, let's take a look at industrials. Here is XLI up about 1% for the week, continuing a move. Looks a lot like the Dow here, Ed, but this has pretty clearly now broken a downtrend for a couple of weeks and is continuing to move higher.
Yeah, and this is one reason on some of these sectors definitely have that Dow feel, which is why the Dow sort of feels more relevant because there's actually a lot of sectors behind it that really are doing it. It's not just the 30 stocks. There's a lot of stocks out there that are really showing strength.
Okay, let's take a look at XME, the metals and mining ETF. A strong upside reversal on Friday, up 2.4% on the day, and for the week, up 4.5%. So that's a pretty strong move, and now decisively back above the 40-week line, the black line on the chart here, and above its highs from earlier in the year, right around early to mid-August as well.
Yeah, and this has a lot of stuff: coal, gold miners, steel, traditional like copper and iron miners, and they're all sort of trending higher.
Okay, and XLV healthcare. Let's check in on how that performed this week. Up almost 2% to mark a 3-week winning streak, and continuing to clear a lot of that congestion over the bulk of the year, really.
Yeah, it's just how boring is that? All it does is tend to go up. The last several weeks, it doesn't make the major moves day to day or week to week, but it's been a really good performer here.
Yeah, and I feel like really since the summer, June and July, even leading maybe perhaps what we were seeing on a broad level, we started seeing names underneath the surface in the medical sector, seeing that rotation, and now it's really it looks like it's following through on a broader level here. What do you think?
I agree, and I think there's a lot of different groups in the medical sector doing well, and really broadly, there's all these sectors. Now, the tech sector is not so much, but there are a lot of sectors, and it's also if the market could show legs, there's a lot of leadership out there.
Ooh, well, that's always good to hear,
Yeah.
because that's been a problem, right? Is just it's kind of in the same story. Even when we do have these small bursts or promising rallies, it seems like, hey, where's the leadership? Where's the leadership? So to start to see more signs that is broadening out is encouraging. We also want to take a look at XLF. This is financials continuing their move above the 200-day line as well. And chip stocks, here's a look at SMH trying to get above the 200-day line here, Ed, not quite able to do it, and falling on the day. For the week, still up a little over 1%, but we're seeing a lot of tight action here right at a key resistance level.
If you want to see the NASDAQ get above the 200-day line, if you want to see the S&P decisively break above, really nice to see the chips take place. And NVIDIA and Taiwan Semi, which I think are the two biggest components of SMH, they are not above their 200-day lines. They're trying, they're getting there. NVIDIA didn't have a very good day, but so that's something. So looking at some of these names, looking at the ETF, not necessarily to buy them, okay, but it'd be nice to see that
participation.
That participation. I'd love to give them a participation trophy, and that I think would be really helpful for the broader rally.
All right. Well, speaking of leadership in the medical sector, let's take a look at Dexcom, DXCM in the diabetes space. Had a pretty good week, Ed, closed positive on the day. For the week, up about 5.5%. So the bulk of this week's performance coming from a strong showing on Wednesday. And, this stock, like many others, really kicked into high gear on that Powell news. So it seems like for traders who wanted to get involved in this, Wednesday afternoon was probably the time to do it. What do you think?
It was, though it hasn't really moved a whole lot since then. So it's not crazy extended. Some stocks did run from there. And right. So this is
holding within this sideways area.
And I don't think it's too far above the 21-day line. Okay. And on a weekly chart, and it's the
21-day, so it's less than 5%, so that's pretty good. We'll take that.
On a weekly chart, there's two things. There's a cup with handle, you could say, going back to April. That consolidation could be seen as a handle, but that handle is now in a couple hours. MarketSmith hopefully will probably show that as a flat base, because I believe that's 5 weeks now on a weekly chart. So that'll show up with a new buy point. So pretty tight action here. There's a new product that they're doing that's supposed to get US approval sometime this month. Obviously, the market is probably anticipating that, but so there's definitely growth in that environment.
Okay. So less than 5% off of the 21-day line. So Ed, if traders wanted to take a nibble on this at that level, it seems like there's still a pretty clear line in the sand of where you might get out. Although even just below the 21-day line, we have a couple of recent price bars there too. So depending on your risk tolerance, adjust position size accordingly there.
Yeah, that's a good way to do it.
And next on our list, let's take a look at LNG. This is Cheniere Energy. It's traded down a little bit on Friday, closing off the lows for the week, up 0.75%. Its second week back above the 10-week line. So Ed, what do you like about this one?
I don't like the low weekly volume on the way back up. So let me get that clear. I do like it. It's found support and held support at the 50-day line. Mm-hmm. It's consolidated. The prior base was only 17%. I mean, so it's not like this was a deep base. So now it has a flat base. So just like Dexcom, it's going to have a 5-week flat base right there. I think that on a daily chart, if it got above this week's highs, which I think was Thursday's highs, that would be, a place where you could enter. The 178 area is also sort of corresponds to the top of the prior base. So there's a little bit of trading, not that that's that meaningful, but while still being pretty close to the 50-day line. I mean, a lot of the energy stocks, they've had these big runs and are still somewhat extended. This one is traded more tightly in general, not just it's slower. So that's nice to see. But the volume, I'd really like to see some stronger volume if and when that goes.
Yeah. That would be good to see. And then what should we be thinking about in terms of this area that Cheniere operates in? What sort of factors are at play right now that we may need to be thinking about?
Yeah, you may want to check the temperatures in Europe, but I mean, it's not just as simple about natural gas prices, because it's really the gap between the US and Europe, or US and Asia, and this the demand for it, because natural gas did not have a good day.
Right.
So that really didn't affect it. In fact, that can make it better for the LNG plays in theory, because if the spread widens, it's like, okay, they get it, or somebody gets it, and there's more demand for that LNG.
Yeah.
So that's one reason why. That's one thing in favor of these LNG plays. They're a little less volatile to the day-to-day swings that natural gas can have, which can be 10% easily on a day-to-day basis.
Great reminder there. And last but not least, in terms of stocks and ETFs to watch, we've got TAN, the solar ETF, looking potentially hot here. I mean, it's on a hot streak. It's got quite a few up weeks in a row, Ed, and now looking like it's finding some support at that round number of 80. Is this primed to make a move? What do you think?
On a weekly basis, it doesn't have a handle, which isn't the best. But, it's an ETF, so it's not really trading off of that. What's nice about this is that, okay, it has First Solar and Enphase are two of its biggest components. And you say, well, why not buy them? Well, they're extended now. But what's a nice thing is that a couple months ago, this was coming down when the Enphase and First Solar were still doing pretty well. Now you're seeing a lot of the solars working together, because there were some laggards. Some of them are very volatile, but then you also have the installers, which are getting hit. They're coming back up. The China names are coming back up. So they're all sort of moving. So it's a time that you can play this in a way and not have a bunch of like a winner and laggard group. This feels more like
stock risk.
Single stock. There's not the single stock risk, but they're all moving together. So even if some are, doing better than others, they're all sort of right now moving in the same direction, which
and we know how this ETF can trade when they're all moving in the same direction, Ed.
Yeah, and they can go the other way too. So there is that element, and but there's not really, I'm sure you could find it, but the individual stocks, some of them are extended and some of them are very wild. So there's not necessarily great opportunities right now. So this one may be one of the better ones. I like that trend line. I hadn't used that, but that's another thing right around where it is right now. So you could buy it now or wait till it tries to clear a little bit more. But yeah, there's probably a lot of good tailwinds with tax credits, a lot of in the US, and just a general shift to solar that bodes well for the sector.
Yeah, we'll just quickly look at some of the names in the group with the strong performances today. Enphase, ENPH among them, up 7% today in some above average volume. I know Array, ARRY was another one that we were looking at with an upside reversal right at the 21-day, up almost 9% on the day. Any others that had a standout day? CSIQ was, I know, another.
Yeah, and this is benefiting somewhat from the COVID reopening, which I think is lifting all the COVID stocks. So that one probably has sort of like a trend line you could get at. It's interesting because there was the U.S. sort of ruled that China is trying to evade solar tariffs against Chinese firms by like maybe building them in other countries in Asia and then shipping them to the U.S. Didn't seem to affect these Chinese companies. I don't know why. So that is a risk always with these China names among everything else. Yeah. There always seems to be a dozen risks with China stocks, but something to keep in mind there. But yeah, there's a lot of names. And Run, that was Sunrun. This is not a leader, but this one really had sold off at one point. Basically lost half its value in a couple months. Now it's coming up. But, so this is a way to play something that has been, so they're all coming up together right now.
Right.
In a way that we haven't seen for a while.
Yes. All right. Well, as we wrap, let's go ahead and talk about the battle plan for the week ahead, Ed. It seems like we are at a key juncture. I know I tend to say that, but this time it really feels like we're at a key juncture.
Yeah, I mean, it's a little bit better. It seems like we're at a juncture where it's last week where it's like we're at a juncture because we're hitting resistance. Yeah. Here it's like, can we just get through? It's like we're above it. Can we now really get past and not get pulled back down? So it's a more positive vibe. It's like just one little more push as opposed to 2 or 3 or 4 more pushes. So it's a little bit better, but yeah, still in that area. I think investors can be adding a little exposure, but if you also just want to stand pat just for a little while longer, that's okay too, especially depending on your exposure. If you've already risen up to 50 or 60% exposure, you might say, well, I'm going to wait just a little longer. Depends on your risk tolerance and honestly how quickly you're able to get out. If you take losses quickly and you're able to get out and just walk away, then you can be more aggressive getting in, but you have to know your investing style.
Right, because it's still a pretty dangerous environment to be buying strength. So chasing stocks is not what we want to be doing. So if the choice is wait on the sidelines or chase extended stocks, I do think, yeah, having that discipline to wait for those fat pitches to come, and maybe we're seeing those setups take place. But just to reiterate what you said, because it's always a great reminder for me to verbalize it too, is, to be ready to back away. Don't miss out on adding if you do get that opportunity that fits your parameters, but also, we're not out of the woods. So we'll have to see what next week brings. And we got to remain open-minded to all scenarios and stay flexible. So I guess we'll cap it on that. Thanks, Ed, for all of your wisdom and analysis. And thanks, everyone, for tuning in. We'll be back with more Monday on IBD Live. So make sure you join us, investors.com/IBD Live, for all the details. I will not be there. I'm going to be hosting Tuesday instead. So the crew will see you back Monday morning. I hope you have a great weekend, everyone. We'll see you next week.